Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 1st of February. Starting off with ARC Minerals, which seems to be making a decent base for itself. We had a bit of bullish divergence there, which had the follow through earlier this month, or last month rather, and holding above the 50-day moving average at 2.5 pence, looking for the top of that rising trend channel from October as high as 5 pence as soon as the end of next month. So a bit of excitement there. Moving along to a stock which is hopefully near the bottom of its recent range, obviously associated with AAA, All Active Asset Capital as well. Here we've got a situation where we've seen a similar, I suppose, really it's all about 30 pence and the idea that we're not going to have any sustained price action back below 30 pence. We had a little dip there back in May, but that didn't last long, and we're assuming the same kind of thing now. If you're cautious of the stock, though, you'd wait for an end-of-day close through that November resistance line and the 50-day moving average in the 33 to 34 pence area. But seems that a dip to 30 pence may be too difficult to resist for range traders. Stock where there isn't quite any doubts in terms of the bullishness is North Coders, which I'm sort of kicking myself for not looking at before. I didn't think the company would be that exciting on the share price front, but a beautiful progression here that we've had since the shares, well, basically since October, breaking the 50-day moving average back at the end of October and actually never being below that 50-day line. Vertical move there, gap through the £3 area as well. And the view now is that at least while we're above the last major high there for January at £3.10, we're looking to as high as £4 at the top of that rising October trend channel, maybe a stock that people have missed to date. Moving along to Cornish Metals, which keeps on fighting the good fight within a rising trend channel that's been in place since May. Bit of a little bear trap rebound from below the rising 50-day moving average, normally a dip to buy into, and above the floor of the May channel, currently at 22 pence. We're looking for 40 pence maybe by the end of next month or going into April. But at the moment, it looks like we've got a decent setup there, and ideally there's an end-of-day close above that resistance line there from the beginning of last month. So the 25 pence level, quite key in that respect. Moving on to a stock where the CEO has stepped up to the plate, Arthur Mulholland, buying in the market, which is very nice. 30 pence looked like a decent buying zone. That's proved to be the case even for him. Got a V-shaped bull flag, looks like a mid-move consolidation here, and still chasing the idea of a move up towards the 50 pence area at the top of a broadening triangle in place since August. This stage, I suppose, only really back below the unfilled gap to the upside at 23 pence, outright negative, but one would be very surprised if there was now any price action either below 30 pence or even if we're lucky below the 200-day line at 32. So 32 pence, holding that area would be a real plus point for Canadian ahead of a move to 50 by the end of next month. A stock which has been horrific, probably one of the two stocks, horrific stocks that we'll be looking at today. They don't always cover the nice ones. Here we've got Chill Brands, which managed to shake off the rather positive sounding update the company had earlier in the week, breaking the level of about 9.3 pence, which was the November support. The main hope for longs here is that we have a quick recovery of that level, 9.3 pence, and then go back into the range, which was between 9 and 20. Otherwise, it looks obviously rather like a sub 5p target for this situation. Moving on to a happier situation, we've got 88 Energy here gapping to the upside after the V-shaped bull flag, one of our favourite little setups there. So above 2.4 pence, looking for 3.5 at the top of that March broadening triangle, slightly reminiscent of Canadian Overseas actually. We've got a bullish divergence line here as well, of which the shares have bounced, and we're also going into a golden cross between the 50 and 200-day moving averages, all backing the idea that basically above the 2 pence area, we're looking for 3.5 for 88 Energy. More simple situation comes from Petro Matad. Here we've got a rising trend channel in place since back in November. Floor of the channel around 3.5 pence, and above that we are looking for a top of channel target as high as 5.5 pence, maybe over the next 4 to 6 weeks. something like that. If you're cautious of the stock, maybe wait for an end-of-day close above the 200-day moving average of 4 pence. But it looks like the rebound here has been done, especially after that hammer candle that we had back at the end of last week. On to what may be the stock of the day in terms of excitement from investors. Surprising given how much excitement there is. The shares haven't actually gone up that much so far. But obviously, we're back up from the 0.15 area lows, but breaking that line of resistance from April at around 0.21, quite key to a potential move to the upside, and a bigger one than maybe the 0.3 area, which has been post-May resistance ideally. Now, there should have been enough work done to get us up to 0.45, maybe as soon as the end of next month. Only negative here really would be if we were back in the 0.18, 0.19 area after just a little blip to the upside. We've seen a few of those before, just these false breakouts that the shares have had, especially above 0.25. Moving on to a stock which has been rather frustrating given the wealth of positive news flow that the company's managed to deliver. I've got a quadruple floor here for Oracle Power in the low 30s or down to 0.3. So a bit like ASIMA, this could be a potential support zone. If it is the case, then one would be looking towards a spike towards 0.4, well, the low 0.4s, 0.45, something like that, just up towards the 200-day moving average. On to a stock which is finally starting to rehabilitate itself. Perez, with the, I suppose there was the great news about Pluto just the other week, but higher low here. 6 pence looks to be the natural support area for the shares. We had that brief December dip below it, but above 6 pence looks as though the shares could get up to 8 and 8.5, which has been the natural top of the range since the end of the summer. Better news as well from Tirupati. Here we've got a rising trend channel that you can draw from November. Bounced off the floor of that and the 50-day moving average at 75 pence. Above that, we're hoping for a zigzag higher up towards the 200-day moving average and the top of the channel at 100 pence, maybe by the end of next month. Finishing off with Extract Resources, where it looks as though the shares seem to be primed for a decent move to the upside. There's been a sort of what seemed like an eternal consolidation for the shares between 4p and 6p. But the idea is that the next time the shares manage to break 6p, they'll just keep going and could hit the top of that rising trend channel from the beginning of last year as high as 10 or 10.5 pence on a 2-month time frame. The other plus point, I suppose, at the moment is that support looks to be pretty well entrenched in the low 5s. So 5 to 5.25 looks to be reasonably solid support now. So above that, hoping for 10p. By the end of the spring, something like that. That's it from me today. More updates tomorrow.